Leaders of Tomorrow 18 are a special initiative that celebrates the undying entrepreneurial spirit of micro, small and medium enterprises. On the show today, on our Insights segment, I caught up with Raman Roy of Quattro. And on Bright Sparks tonight, we'll feature Renew Power, which is on a mission to reduce India's carbon footprint. We'll also speak to Sarex, a chemicals player in the textile space. So that's what we have in store for you tonight. Let's start off right away with our Bright Sparks segment. Our first story today is a 5-year-old startup that's creating waves in India's clean energy sector. Renew Power is the brainchild of a successful investment banker who then forayed into the renewable space with an aim to boost India's energy portfolio and transform the power sector. Here's ET Now's Libza Manich caught up with the man behind Renew Power. Take a look.
Gurugram-based Renew Power is a leading name in India's clean energy space that aims to transform the nation into a clean and green India. 5 years ago, a visionary in the renewable energy sector, Sumant Sinha, launched Renew Power to boost India's energy portfolio with sustainable solutions using wind and solar energy. Today, the company has its presence across 8 states in India.
You are an IIT-IIM alumnus who was enjoying a flourishing corporate career. Then what prompted you to take a plunge into entrepreneurship and launch an independent power producer of clean energy?
I was letting in some ways my own background, exactly the things you mentioned, IIT, IIM and a flourishing career, actually come in the way of taking risk because I had a safe and secure job in which to just carry on. And so I realized that I should not let my background prevent me from doing what I thought was doable in the market and given the opportunities that I was seeing. And so I decided to take the plunge and move on.
Your 5-year-old startup has recently emerged as India's first independent power producer to cross an installation capacity of 1000 megawatts. So tell us more about the commission capacity.
Well, we have, as you rightly said, more than 1000 megawatts now of commission capacity. And I am very proud that we are the first company to have got to this point. So of our total 1000 megawatts plus some installed capacity, about 80% is wind and the balance is solar.
So as solar energy is emerging as the next big thing in the renewable energy space, is the focus likely to change in the next couple of years?
Today, when I look at our pipeline of 1,500 megawatts, almost 80-85% of that is actually solar. So we are really making the transition from a wind company to becoming a much more broad-based wind and solar company.
Well, Renew not only aims to build a clean and green India, but also intends to change the lives of masses with its strong focus on CSR. So tell us, how is Renew bringing in positive winds of change in the society?
We've adhered to a very high level of corporate social responsibility. So in all the locations that we operate in, we make sure that we are good neighbors and good community members. We provide services, whether it's schools, drinking water, constructing roads, providing animal husbandry services. We do a lot of that kind of thing, medical camps for a lot of the villages where we are operating in. And our view is that we must have touched the lives of almost 100,000 people in different parts of rural India.
Renew's outstanding performance and clean energy assets has not only won the hearts of Indian masses, but the brand's impressive portfolio has also garnered enormous global funding. Leading foreign investors like Goldman Sachs and many others have invested significantly to give a boost to the company's financial portfolio.
Well, Renew has attracted some tremendous foreign investments. So tell us, how is the company playing the role of a wealth creator in India's economy?
We've raised, as I said earlier, $650 million of equity capital from 4 different investors who are all very different from each other in different geographies, with different mindsets and so on. But they've all chosen to repose faith in us. Our market cap in the last round of fundraising had crossed $1 billion. And we hope to continue on that journey as we go forward.
Well, Renew works closely with the government to provide clean energy solutions to the masses. Do you think there is significant focus from the government on the renewable energy space, or do you wish to highlight some expectations?
The roadmap that we have is only for auctions in solar for the next 6 months. But what will happen after that? That visibility is not very clear. So if the government could actually give a roadmap for longer than that, I think that would be very useful. The government has one primary objective, which is to reduce costs, reduce tariffs, which is of course absolutely essential in a country like India. But at the same time, if you don't let capital providers make some returns, then future capital will not come into the sector. And the one thing that we need in this sector for this 125,000 megawatts of additional installations is a ton of new capital.
What is the way forward for Renew? Is the company eyeing to create more records in the renewable energy space with its tremendous growth?
As I said, we already have a pipeline of 1,500 megawatts in addition to the 1,000 that we've done. So our hope is that in the next 15 to 18 months, we'll cross 2,000 megawatts of installed capacity, put a little bit more daylight between us and everybody else.
What would be your Go Green message to the viewers?
My Go Green message to the viewers is cut down on fossil fuels. To the extent that you can reduce your own consumption of energy, please try to do that. And certainly encourage the government and policymakers to try to move towards cleaner sources of energy.
Today, India occupies the third spot after US and China for being the biggest greenhouse gas emitter, and Renew Power is all set to alter India's position with its green energy solutions. Within a span of 5 years, Renew has won several awards and boasts of many firsts to its credit, showing early signs of becoming a leader of tomorrow in the renewable sector.
Small, medium and micro industries in India contribute nearly 8% of the country's GDP, and with the successful launch of the Make in India campaign, the government has set itself a target to increase it to nearly 25% by 2025. A large part of that contribution will come from the chemical industry space, and Sarex Chemicals from Mumbai is one of the few firms who manufactures fine and textile chemicals for the manufacturers at the national as well as the global market level. Take a look.
Chemical industry in India plays a pivotal role in the country's economic development, serving the need of the sectors ranging from textile, plastic, printing to agriculture. Chemical industry in India has provided a thrust to the growth of the MSME sector. One company catering to the chemical needs of the major textile manufacturers in India is Sarex Chemicals. Launched in the year 1952, Sarex has been successful in creating a client portfolio of companies from over 30 countries of the world.
Mr. Saraf, how has been the journey for Sarex so far?
The company started in 1952. So it was started by my father. He started business from a higher chair and a higher table with 500 rupees capital, and now the company has grown to these levels.
So what do you think are the key challenges of the chemical sector?
Majorly in the chemical business, you face competition from two sides. One is from the multinational companies who look at India as a very promising market.
Right.
So they are always trying to get more market share, even by giving products, good products at very low prices in order to get an entry into the market.
Right.
And then you face a lot of competition from non-traditional players, as we call them. Okay. These are local suppliers. There are so many of them. And just to keep their market share, they are ready to provide products and services at all possible prices, just in order to have a little bit of business.
Let's talk about the investment and the turnovers of Sarex.
See, we basically would be approximately a $45 to $50 million company, right, out of which more than 50% of our business would come from exports.
Right.
And we have invested a lot in R&D and product development at our plants. We have installed a latest state-of-art Marks and Spencer accredited facility for testing, which very few chemical companies in the world have. Some of the fabric companies or textile companies have this facility, but we are one of the only chemical companies who have this facility.
What kind of expectations do you have from the government?
See, primarily I think the government, the taxation policies and the number of taxes which we have, they make it so cumbersome. They have a separate excise duty, they have sales tax, they have GST separately, right, the number of forms, all that I think can be reduced if they have a simple one tax structure.
Right.
If you introduce VAT, which is prevalent all over the world, will make life very simple, because you will have a level playing field with all suppliers then, So all that, if it is reduced, I think India could really have a very good potential in the made in India or make in India scenario.
Taking a cue from your answer, do you think Make in India will be the future for India or a flop?
I think it has got a future. If you relatively go and see Europe, America, the cost of manufacturing is definitely on the higher side. If the government is able to implement this policy well, I think it has got a very promising future.
So my last question will be, what is the success mantra of Sarex?
We always believe in trying and providing solutions to customer rather than selling products.
Right.
So what we try and do is, if a customer is facing a problem, we try to help him overcome his problem. Then the customer is more willing to do business with you because you're solving one of his problems, rather than coming to him to sell a product which various other companies are also ready to sell.
Right.
Raising the standard of quality high and keeping customer services over sales strategies, Sarex Chemicals has become one of the largest exporters of textile chemicals in India. Not just this, Sarex has been one of the few companies from the chemical manufacturing sectors to have been recognized by the government with a 2-star export house status.
All right, it's time for a quick break here on Leaders of Tomorrow. When we come back, we'll bring you an exclusive chat with Raman Roy. Do stay tuned. Welcome back. You're watching Leaders of Tomorrow, eating our special initiative for the MSME space. I caught up exclusively with Raman Roy earlier. Here's what he had to say about the MSME and startup space and also how the future is looking. Take a look. What advice would you have for MSME entrepreneurs who are looking at starting out either in the tech space or who are looking at, starting out and are looking to you for advice?
Within India, whether it is tech or IT space, take the largest, Genpact. I was employee number 1. At that point of time, nobody knew what we could become. Spectramind, which I started out, we didn't know what we could become. We grew to 18,000 people over 5 years. So it is great to think big. It is great to have big ambitions. But just thinking and ambitions is not good enough. With that comes in a lot of planning, a lot of hard work to be able to achieve that. To everybody who is thinking of starting out or is what today is called a small and medium enterprise, their chances of becoming big are huge, provided they plan and they work hard.
Some of the names that you were just mentioning have all gone through the consolidation route. Is that a trend that you think is particularly going to be true for the BPO space?
See, consolidation happens. It happens because the overheads can get consolidated and brought down, and the cost per transaction goes down. That is a downstream activity. If there are opportunities of consolidation, opportunities of getting together and making 1 + 1 greater than 2, those opportunities will come, and those of the target audience that are evaluating these opportunities, I would urge them to look at it with a microscope to see that it will truly make sense and then make it happen. Going forward, I see the merger part of it playing a big role within the MSME segment, whether it is in the tech BPO space or it is in manufacturing space. I see mergers playing a big role because that the cost factor will play a big role. So bringing down the cost and enhancing profitability will play a big role, which the mergers will help in.
I want to talk about the regulatory framework right now. What should the MSME entrepreneur be aware of when it comes to regulations that exist for the industry?
Aware of is a very broad term. I would say in the area that you decide to play in, having intimate knowledge of the regulation is critical. So if the company operates in the Indian environment, if your customer base is in India, having the knowledge of the regulations in India for that segment is crucial. But what is tougher is when you operate on an international platform, when you do what we lovingly call the BPO and do offshore work. Because then you need to understand what is the regulatory environment in your customer's country. And there, sitting in India, it becomes very challenging to know that. So coordinating with local lawyers or coordinating with the legal department of your customer becomes very important. More and more people are getting arrested because they are consciously violating the law and trying to make a fast buck without even having to pay taxes on the fast buck that they make. So to the target audience that is looking at some of these areas which are quick riches but violate the law, I would advocate a very strong caution because even though it is illegal overseas, now they will get arrested in India because it is illegal overseas.
About 2 or 3 years ago, there was an entire wave where companies started looking at tier 2 and tier 3 towns. Has that sustained?
I think the move to tier 2, tier 3 has taken the next generation. Now we are going into the rural BPOs as it is called. As Quattro, we have about 600 people sitting in areas where the nearest airport or the nearest railway station is 3.5 to 4 hours away. The quality of resources is outstanding. So distributed processing, where we take the work where the workforce is, I see as the next generation. And that is where the MSME segment will play a big role. The target audience who are seeing your program will play a big role because they will go back to their roots and set up centers which are 100, 200 people centers, basically a 100-seater, which is in a catchment area where there is talent that is available, and companies such as ours will train them, give them the capability to be able to create that, and we will create a revolution. And I think the next million jobs in this country, which are the white collar jobs, will come with this distributed processing model. The government has a role to play, and we are working with the government to see that they understand that the next million jobs will come from that segment.
Speaking of revolutions, the government is very excited about the Digital India campaign, but they're wooing largely the IT companies. How does BPO really fit into that?
I think IT is to be able to lay the kind of a skeletal framework. But once the framework is laid, all the work that is done on the framework will all be BPO. So IT is a precedent. That is why in our younger days we used to be called ITES, IT enabled services. Because without IT, these services are not possible. So because we are starting from near zero, IT is required to be able to create that framework, and once the IT is there, all the work that will be done in perpetuity is going to be what we lovingly call BPO.
One of the things that a lot of entrepreneurs who write into us or call us ask is as far as funding goes. So, at what point do you approach, say, for example, a VC or a PE fund? Or, how easy or difficult is it to go about raising funds from the banks? What advice would you have to give them?
It's the biggest gap today. There is a lot of money sloshing around waiting to be deployed. And there are a lot of entrepreneurs who need the money, and the twain don't really end up meeting. And that is where networks such as the Indian Angel Network, I'm a co-founder of that network, come to play, that allows as a bridge. Today we have 400 plus angels who have the knowledge, who have a mentorship capability, and who have the capacity to invest and are willing to do so, that we put together as a network, and we then attract the entrepreneurs to say, come and present what your thought is, what your idea is. So there is a lot of the availability of the money is not a challenge. Linking to that money is challenge number one, and once you do link to that money, what is the plan that you present? That is a challenge. And the biggest advice, if I take one element that I tell them is, this will happen, trust me, is not a plan. How will it happen? What skill do you bring to the party? How will you make it happen is essential.
Speaking of funding, the government, for example, has set up SMILE, which is the fund of funds for MSMEs. Do you think a separate framework, whether it's regulatory or whether it's legal or funding, is necessary for the MSME ecospace?
I think it is a big opportunity for India to show that there are other aspects of return on the fund that you look at. It is not only IRR or the financial returns. It could be a model that says, we'll just charge you 2% interest, or it just says that you will just return the money as long as you create 10,000 jobs, or as long as the female child is insured, does not drop out of school. So where we are trying to create a startup culture, to measure those cultures only against a financial return can kill the goose that is going to lay the golden eggs, because you need a totally different parameters, and that is where fund of funds is to me a bit of an issue, because you are giving the funds to other funds whose only criteria of evaluation is IRR or financial returns. The government funds have to be used to meet the social objectives, and there has to be a criteria to be able to measure it, whether it is job creation, whether it is education, whether it is sanitation, whether it is water. I mean, the opportunities are huge, and this is not an NGO. It is not saying that you fund somebody and not expect the returns. Question is, should we be creating a fund of funds and monitor it on IRR? Should we be creating a localized model of what is working there and help the entrepreneur? He's going to work hard, but who is creating that capability for him to be funded? That is what will take this country to the next level. That is what we collectively have to think of what has to be done.
With that, it's a wrap for tonight on this edition of Leaders of Tomorrow. If you want to write into us, do feel free. The email ID is leadersoftomorrow@timesgroup.com. You can reach us on social media using the hashtag LOT, or just dial that number which is flashing below at the bottom of your screens. Thanks so much for watching.